Good morning, it's Wednesday the 23rd of November. This is the Phoenix Blue update brought to you this morning by Tom Colley. First off, apologies for this being later than normal. Not the end of the world today because the markets have been very quiet so far this week. We're not expecting them getting a lot busier. We've got the Thanksgiving bank holiday coming up tomorrow. So generally things are quiet. Looking at the news, yesterday we had core retail sales out of the Canadian economy. Again, they disappointed. That's the the fourth month now on the trot that they failed to hit their forecast. So obviously, retail sales, the consumer sentiment within Canada is relatively low at the moment. We did see a reaction on the Canadian dollar chart. However, we saw lots of reactions yesterday as the news went from positive to less positive to more positive over the OPEC oil capping scenario, which will come to a conclusion next week. Okay, we also today have a Japanese bank holiday, so the yen market or the overnight markets will have been quieter than normal. Then going forward, we have something which is the autumn forecast statement, which is the once a year event, which is effectively another budget. We see a budget, I believe, in February, or is it March these days, and we also see an autumn forecast. More significant than usual because of the Brexit scenario. Philip Hammond, the Chancellor of the Exchequer, will be in Parliament going through the statement. Suggesting how the UK economy or how the government will manage the economy through its measures, etc., going into the next 6 months or so, or further ahead, as we look at the Brexit scenario. So, an element of high risk if you're trading the pound today, so beware of that. This afternoon, out of the US, we've got core durable goods, which is it will be interesting data, and unemployment claims, which is a weekly data and doesn't tend to have the nature of the effect that non-farm payroll does, which is next week, next Friday. We also have crude oil inventories. These have been very relevant over the last year or more. We are out of this market as we speak. The crude market has been very unpredictable and volatile based on that OPEC agreement news. Tonight we have the meeting minutes for the last meeting of the FOMC. Anything other than effectively confirmation or very positive indication that we're going to see a rate rise in December will be met, I'm sure, very strongly with downside on the dollar, because based on what I've read and what the futures markets are doing, the rate rise by the markets, and it isn't a certainty, but is perceived to be a virtual certainty by the markets. So be careful around that. If there's any sort of indication whatsoever that Janet Yellen, the FOMC, are stepping back from their most recent positive statements about that rate rise, we could well see a pullback on the dollar. Okay, and then just tomorrow, just to remind you again, tomorrow, Thanksgiving, big US holiday. In all honesty, we're unlikely to see very much on Friday either, as I'm sure the markets will effectively count that as the end of the week in the States. Okay, over to the charts. Well, very much dominated still by this ongoing dollar picture. This is the dollar index. It's a 4-hour chart. The reason I've shown you this is we've got a trend line here, and as long as the dollar remains above that trend line, we will remain positive on the dollar strength. Any move below that, be it brought by the FOMC minutes tonight or whatever, and then we will again look at potential particular intraday short trades or dollar weakness trades, but even so, this is a massive level here. This is the level of the 13-year high, the top of the last 12 months or so consolidation. So even if we see some move down, we're not going to be looking for anything significant unless we break below this level. which I don't anticipate happening unless something changes in the meantime. Over on the pound, we saw a big move up on Monday. That's basically that was a movement. We saw 1% move in a minute. Was talk of it being one very large GBP JPY trade. As it happens, that's now pulled back. There is a level here earlier at the week when that was positive there. The first move through there, I was looking at that level as a potential entry going long, but as we discussed the day after, when the pound is on the move, it rarely tends to pull back, so I'd need to see some significant price action in conjunction with the dollar weakening in order for that to be looking at an entry there. To be fair, through the last couple of days, we have been seeing a softening of the pound. It had remained the strongest currency as the dollar rose. It even rose in the early stages of the post-Brexit post-Trump election victory, and even as the dollar moved really strong, it compared with other markets, it still stood its ground. We had that one-off move, but it does now look like that was potentially more of a one-off move, and as I say, we've seen a softening on the pound, whereas when we analysed at the weekend, we were looking for opportunities on the pound cross pairs. We're now more cautious about those pairs simply because this move here didn't follow through. Over on the Aussie, we had some data overnight, which was the second level data, so we haven't talked about it this morning, but the last quarter's building permits were significantly below expectation. However, we still got a bullish move on the Aussie into around this level that we're interested here, which is the 74.50, 74.60 zone. It hasn't actually reached that level. It stopped just shy of that. We were highlighting that at the weekend in our analysis as a potential trade to the short side. We expected to see more of a weakening on the dollar for that to occur. We are still watching this, but we'll be cautious about any entry there. And basically we'll need that 4-hour trend line I showed you in the first slide in order to be able to take a trade back down to the for price to come back up to that level and for it to turn and come back to the downside. So basically we'll need to correlate that with the dollar index, but this move looks like it was a bit overblown and is this morning falling back. Over on the Kiwi, we took an intraday trade yesterday, and we've got this daily trend line through here. We didn't trade that specifically, but we did have a short term on the 1-hour chart, a head and shoulders that we attempted to catch the retest. We'd got a bigger picture of that was a technical entry, allowing us into a trade, really trading this trend line here. The head and shoulders didn't play out correctly, but we are, as we remain below this, as we sit now below this with a somewhat bullish move, so potential for that to come back to the downside. So that was a cautious entry. It was a low risk entry, but the key we had through last week, or really the last 10 days, we'd had a very weak Kiwi. We've had the earthquake there, so uncertainty. But as I say, there was a technical opportunity which gave us a way into a longer-term trade that without the end or the scenarios with what's happening at the dollar and the earthquake at the moment we might have taken. So we're in a trade there. At the moment we're slightly out of bed on that. That being the entry there, we'll be looking for that to go back into profit today. Hopefully, we'd like to be in a position to get stops at break even before the FOMC minutes come out, although I think that's probably being optimistic. What we are seeing is a continuing bullishness on the major indexes, particularly in the States. We had new highs yesterday on both the S&P and the Dow. I've got a channel marked in here. Price actually did intraday pull back down to this previous all-time high at this level here yesterday and has recovered, but at the moment it looks to be on a shorter time frame, smaller time frame, double topping at that. I'll be looking for price action entry back down at this level on an end of day basis. We do see long side on all the, particularly American equities. We talked earlier in the week about a repatriation of US dollars, which could lead to significant buybacks by corporation buying their shares, thereby strengthening the remaining shares. So we'd look to long side there. Plus, this time of year, we're also always looking at a seasonal play to the long side. That remains to be true throughout. The FTSE also was looking at a level around 68.25 yesterday. Got our eye on that again as being a level for a pullback in order to take that back to the long side on a seasonal move. Mentioned crude, we've got crude oil inventories, but what we saw yesterday, we saw a really bullish move through the morning, which died off through the afternoon, purely driven by the information ostensibly coming out of the pre-meeting of the OPEC producers. There's talk of a 0.4-0.5% reduction by member states and Russia, etc. There's also, however, talk about countries not being involved or not accepting that. So there's still a great deal of uncertainty about that, and we are used to a lot of talk around these meetings. I'm sure if we fail to get that agreement on the 30th, we're going to see downside in this market. But until such time as we get that position, it's a market, along with the Canadian dollar, that we are predominantly out of, because those news, they're not even news events, they are simply just people talking to the press or people allegedly involved, and the information isn't that reliable. Okay, guys, so really not a lot to look at today. Trade cautiously. We've had a lack of liquidity. Going forward, we've got the bank holiday tomorrow. Just a reminder again, we're on Instagram and Twitter. If you want to follow us on there, you can see updates and what have you on a regular basis intraday. What we'd also like is some feedbacks on any sort of platform, Twitter feed, Instagram, actually on YouTube, or directly on the website, on the contacts page, or email info@phoenixblue.co.uk. Let us know if what we're talking to you about is what is working for you, is what you want to know, anything we can do that might be of interest to you. And let's try and get a dialogue going and see if we can basically maybe alter the morning updates and also look to provide you with some other useful information. Okay, guys, again, apologies for this being a bit late. Trade carefully. It's a week to be predominantly sat on the sidelines. We'll speak again in the morning. Take care.